All right, everyone, here we are with ticker symbol DKNG, Draftkings Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. And also, before we jump into this chart, I'm sorry to sidetrack and real quick, I do want to announce it to all my investors that are first-time viewers and also my subscribers. One of the quickest and easiest ways to say thank you and give me positive feedback is clicking on that like button down below. I'd highly appreciate if you guys take a moment and click on it if you find the video helpful and insightful, that you would actually think of recommending it to somebody or even saying, okay, wow, this was great information, it was helpful. I would really appreciate you guys smashing that like button to let me know you guys watched it, and it's the easiest and quickest way to give me that thank you from a click of a button. Let's jump into this chart. So DraftKings Inc. honestly has had some volatility. It fell below the support level. It rose up, broke through the 50-day moving average, and quickly fell again. So we hit a new low here in the bearish tracks of 37.23, but it recovered quickly and it leveled off at 38. So it's not falling quickly as we expected. A lot of people were expecting this to start falling quicker than it already has, but it has actually created some type of support here. I'm not saying that $38 or $37 is a support significantly to keep this up, but it's kind of holding off the process of falling to newer lows fairly quickly. So we need to watch this very closely and see what is important for tomorrow. And also, our resistance and supports have slightly changed. Now, we have the 50-day moving average slightly below the resistance. So we're going to get into that in just a second. But I want to point this number out down here, 37.24. Super important number. Keep that in mind for the next coming days and weeks, because if it breaks through that, this will start to see newer lows. But before it gets there, the bears are going to try to break through support, and that's 37.98. If the bears accomplish that, this is pulling further away from the 50-day moving average of 39.27. I'd write that down. As long as we're below it, the bears are in control, and the moment we're above it, the bulls are in control. So if the bears are pulling away from the 50-day moving average in a downward direction, the bears are starting to gain more control and keeping this one from coming back up. And the first step of doing that to pull away from the 50-day moving average is breaking through this support, 37.98. We are already in bearish territory, and the bulls try to reappear, quickly bringing this up, and it quickly fell down. So I want to emphasize to all investors, if it breaks through support, pay very close attention to how this stock is reacting and how quickly is it hitting newer lows or pulling away from the 50-day moving average. Now, if it breaks through and it's hanging out sideways, also look for indicators if the bulls are trying to reappear and bring this one back up. On the other hand, we have what the bulls want. If the bulls accomplish this, they got back into bullish territory by breaking through the 50-day moving average, which is 39.27, and by doing so, they get in that bullish territory to then aim towards pulling away from it. By breaking through resistance, they turn that into a support, and they're pulling away from the 50-day moving average, getting deeper into bullish territory. So 39.62 is our resistance level, the highest point before this fall, and the bulls are going to try to break through that. If they accomplish that, they will get back into bullish territory. If they can turn it into a support and slightly pull away from it, confirming newer highs, they could be on their way to pulling away from the 50-day moving average to get deeper into bullish territory. But before they're able to do that, they need to break through the 50-day moving average of 39.27, and from that point forward, break through this resistance to reach newer highs and new resistance levels. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.